If you're sick and twisted and wish other people ill will, it's possible that you need some mental help and might want to seek out a professional therapist or somebody to talk to. I'm going to get into that a little bit today in today's video, as well as talk about the markets and what we see going on. So stick around, it should be a rather interesting video. Hello, my YouTube friends. My name is Adam Kahn, and this is Dividend Retirement. Welcome to my journey of rotating out of growth stocks into dividend retirement type of investments, and my journey as I get older and slowly push into retirement working less. So, what was I talking about at the intro? Well, I'm going to tell you a couple of stories and some things along with some discussions I've been having. I was watching this video about a poker player who really gets this enjoyment out of bankrupting the other guy. And it made me recognize how sick and twisted some people are. Like, I get wanting to win. I like playing poker. I've played it for years. It's a good sport. I think it's a lot of fun. And I also recognize the goal of the game is to win the other person's money. Now, I've played at the casinos. I've played at home games. I tend not to play at home games because what ends up happening is I don't want to win my friend's money. And for the most part, like there was one game where we would play for $10, and my attitude was maybe everybody who puts in the $10, we should buy some pizzas or sandwiches or whatever, and whatever's left over, the winner could have. Like, my goal is not to try to beat the other guy as much as I'm competitive and I want to win. And I don't want to beat the other guy so badly that they end up in financial jeopardy. We ended up adding rebuys. One of the guys in the game would rebuy so often, all the way down to the end, that we had to change the rules, get rid of rebuys, and offer like maybe one or two maximum rebuys because most of my friends felt the same way. Now, we could have played for more money, their games for a few $100, but again, my attitude is if I want to play for legitimate money, I'm going to take the trip down to the casino and play with a bunch of strangers where I don't have the same attachment of wanting to hang out with the guys. The thing is, when I saw that video and recognized how sick and twisted some people are, where they actually get an enjoyment out of trying to bankrupt the other guy, I see similar personalities in some of the behavior on some of the viewers on YouTube, and it bothers me as to what they hope for. Now, we all want to do well in the markets, right? We all want to have good positions and see ourselves have success in whatever fashion that is. The reason I started the channel was to encourage people to save for their future and recognize that the markets go up and down, and the younger you are, the more you actually want to see a correction. I had a discussion with my son recently at lunch where at his age, where he's 15 years old, he would actually hope for a big correction in the stock market. Gives him opportunity to buy things at a lower price, get in, own more shares, because the more shares you own, the more of a percentage that is. And in time, when the companies and things get back into an upcycle, it'll pay off in spades. Me, who's a little bit older, has a different perspective on it. Also, since I've ridden through the 2000 correction, the '08 correction, COVID, which was a lot different, as well as like 2022, those were much different corrections because they were way short-lived, and even what happened last April was completely different. But when you go back to the older ones where they were a longer time frame, even if you're able to have success in it financially, watching the world and a lot of people go through the stress and miserable things that come along with the recessions and the bad things is not a good overall thing. So I suggest that you look at yourself a little if you're getting enjoyment out of the other people losing. And it's not simply wanting to do well for yourself and really maybe see everybody do well. Wishing that other people are leveraged and that they go through really tough times is just a little sick and twisted. And if that's you, you probably want to look internally to see what inadequacies you have going on in your life that you root for negative for everybody else. Now, forgive the rant. Like I said, it was going to be a little off topic today, but some of the comments bugged me about what the wishes were versus wishing everybody well. I hope that all of you who watch my channel really wish everybody well and recognize no matter where the markets are, people are going to have good days and bad days. Hopefully you have a well-diversified portfolio so that on moves like we're having now, Sure, you're going to have some things that do poorly, but you know what? The defensive stocks are actually having a very good day to offset that. Now, me personally, I'm down on the day, but really, as a percentage, it isn't all that much. And as I've been slowly rotating for the retirement journey, it's been fortunate timing that I've rotated out of some of that stuff and sold some calls on some things because Clorox, not JP Morgan, forgive me, Procter and Gamble, Kraft Heinz, a lot of these companies are actually doing quite well as the markets have been rotating and doing pretty poorly, which is why I think it's so important that you reach out to financial advisors and make sure that your portfolio fits your goals for what your investment journey is. Now, as always, this is not financial advice. I am not a professional financial advisor. You guys need to do your own research, reach out to a financial advisor, and make sure you're doing the investments in your account using your research, your advisor, and anything you need, and not listening to guys like me. But recognize that if you're well diversified in any economy and in any market, you should be able to survive and do just fine and possibly thrive when things turn around. You also have to listen to what the signs and tea leaves are telling you. Now, markets are markets, and I don't think the market is ever wrong. I do think it can give you indications as to what's going on, and if you're paying attention, be wary and try to be ready for anything to happen because anything can happen. Nobody is always right about it. Now, I would be cautious about what's going on with Bitcoin because even though it never closes and it's hard to determine when it breaks through that shoulder, it has absolutely broken below that shoulder length. And if the charts are right, I mean, look, the shoulder was at like 74,000 and change, all the way up to 124,000. So it's a 80, 90, 100, 110. That's a $50,000 move on the Bitcoin. Theoretically, that's how much lower it should go once it breaks through that shoulder. So according to charting theory, it should get to about 24,000. Now, do I think that's going to happen? Maybe. I mean, Bitcoin is no different than tulip bulbs in some aspects. Like, there's no way to really value it other than what people agree to the valuation. But it could also reverse and go straight back up. Bitcoin is very hard to determine where it's going to go. And the other thing is, what I worry about when I watch it is there's a lot of money invested in it. There's a lot of Bitcoin money that went on and bought homes and did other things with it as well. That I have a concern that if Bitcoin really crashes and goes down to 24,000 or wherever it ends up going, that the money that starts being lost and people feel like they don't have starts getting sucked out of other parts of the economy. The other thing that I've mentioned that's bothered me is the way that the metals have been moving around. It just shows that there's some underlying nervousness. And if the money really gets sucked out, all the people that have run into the metals feeling like it's going to be a safe haven because the dollar is going to get devalued and all of these other things, what I find is if it really is a real correction, there isn't much of a safe haven other than potentially being in CDs and treasuries. So you kind of have to be ready for anything and not assume that metals will be my safe place. They've also moved like cryptos did back when Bitcoin made its highs originally, which makes me worry that too many speculators have gotten involved and it really could crap out. And when I look at charts on it, to be fair, silver could go back to $30 rather easily, and it could go back to 50 very easily. It had such a dramatic move, and it took a very long time before it broke above 30, and typically these things go back and retest where they were before. Again, not a prediction. I am not saying it will happen. I am just saying realistically these are things that could happen, and it's possible if you've run into the metals as somewhere you picture as this big safe haven if the economy corrects, that it may not work out the way that people always intend. Again, not financial advice. You really don't need to listen to me. Now, anybody watching the channel looking for picks, hoping that I give some advice, I would still stick with the defensive stocks, and I think a lot of them are okay. Recently, I was looking at General Mills. The negative is if the market catches itself and starts going higher, these things could soften again because they're not exciting and they're not going with the tech companies and shooting higher. But what I like about companies like General Mills is A, it's paying a 5% dividend. B, currently it's trading at about a 10 times PE ratio. So even if we have a slowdown, odds are they continue to sell product, they continue to have income, and hopefully it's enough to be able to pay that dividend. You add to it that if we have a slowdown, that means interest rates do legitimately probably come down, and possibly not just the short end. That's when we can see the longer end yield beginning to come down as well. And if people can't get returns owning CDs and high yield savings and things of that nature, they'll likely start looking to dividend stocks. So even if the earnings aren't doing as well as one would expect, it's possible to still see those stocks go higher and the PE expand, mainly because people are looking at the dividend now against what they can make in other, what they would consider safe assets. That's why these become defensive plays. It's very hard for me right now, even though I think Meta is a really good buy at the prices it's trading right now. It's very hard for me to be super bullish on it because if there is a money suck, meaning the Bitcoin sellers continue and it drives into the metals, which drives into the equities, which drives into housing, which is a possibility. I think the signs that we're seeing out there are indications that this is something that is possible. Again, not a prediction. But if that happens, things like Meta will get so cheap and they will sit there for a while. You'll have plenty of time. Now, maybe you miss out on a really good opportunity, which is why I'm not saying don't buy these things. I do think the valuation where it is at the growth rate that we have foreseeing in front of us is really reasonable. I'm just being a little bit more cautious right now because I don't want to get caught in some huge correction, which people have been talking about for an awful long time. The other thing that makes today a really interesting day is that we have both Amazon as well as MicroStrategies and others reporting after the bell. It's possible that Amazon is fortunate enough to be able to be the catalyst that catches the market and reverses it back higher. It is also possible that it can be the catalyst that drives it way lower. When I look at the options, they're expecting a $20 move, which is pretty significant. That means they're expecting it to move 10% potentially. It's trading around 223, I think, last I looked, which is at the bottom of its recent range. Very interesting spot for it to be at. Very interesting how much volatility is priced into the options. Uh, Very hard for me to make a decision. Amazon's a great company. In my set it and forget it account, I don't make changes in it. It is one of my larger positions because my time frame is 10 or 20 years, which even if we end up having the correction I'm talking about, should be a long enough time frame that a company like Amazon should be doing okay by then. The thing that the markets are obviously nervous about is the capex spending that they're doing really going to make profits in the future? Or are they just racing to beat each other without having any recognition of what this is actually going to do for the companies? Because if there's no profit in the long run and they're just spending, they're wasting investor money on these things that may not be profitable in the future. At the same time, they seem to think there's something to it. You have to trust the executives and the companies you're investing in, or you shouldn't be investing in those companies. You also shouldn't be over leveraged, which is where I'll go back to the guy who's rooting for everybody to fail. That's some sick, twisted stuff, and really, I'm not on the same page. I do root to be able to buy things at a cheaper price, but I don't think of myself as rooting against the other guy to lose and go bankrupt so I can get some deal. I don't even think about the other side of it in that respect. And I honestly hope everybody does well, and wherever somebody's getting out, they're making a profit for somebody else to be able to start their position that they can stick with for a long time and do well with as well. Anyway, hopefully I'll be able to rotate into the dividend stocks. I kind of kicked myself that I didn't rotate more quicker because I didn't see this coming per se, but I started to feel like maybe the market had run pretty far and I should be really grateful to kind of rotate into that stuff and just have the dividends come in and not worry about the valuation, because to be fair, the values of those dividend stocks were continue to go lower and lower. But my real attitude is, if they pay those dividends, what's the difference? I still was sensitive to the fact that the prices kept drifting higher or drifting lower. So maybe I tried to time it too perfectly, but I still think there's plenty of time because there's a lot of them out there paying a 4 or 5% dividend. Now, one of the fans or one of the viewers, Rudolph, who watches often, asked me about a REIT that I took a look at, and I didn't dig into it in depth. I really didn't. So please take it with a grain of salt. The only thing that I did see is it pays a 17% yield, and anything paying a 17% yield immediately throws up red flags to me as something that might not be sustainable. Rudolph, it is not financial advice. I do not know. I didn't dig into their financials. It's just a general rule of thumb that anything giving too big of a yield worries me, that how are they able to make that money to be able to pay that out without jeopardizing the value of whatever their company. It's always been my analysis with those yield max and some of the others. And when I watch too many people getting into things like these high yield funds, I find that maybe those have run too far, and that's a bit of the squeeze going on. The covered calls that are giving 10% or more that people want to be able to rely on, thinking, oh, I can retire with less money. Sometimes things don't go how the herd expects them to. And if you go with like the tried and true and aim for like a 3 or 4% return, I think you end up being a little bit more realistic about what a market can give, still keeping up with inflation by giving room for the market, for your account to grow the additional. Like, if you can expect 8% return and you're able to survive off of 3 or 4%, the other percentage allows your account to keep up with inflation so that you can continue to draw the 3 or 4%, watching your account grow, but it's only growing with inflation. You're not really getting ahead. I hope that made sense. I know it kind of went around a bit. Anyway, I hope everybody's doing okay. Let's hope that Amazon and MicroStrategies are not the catalyst to push it even lower tomorrow. Although, like I said, it is a possibility. And hopefully everybody's diversified well enough that it really isn't that big a deal. I hope you're all enjoying your Thursday outside of the markets being pretty crazy. I hope everybody's getting such beautiful weather and enjoying their day. Again, Tuesday, the lives, we'll be doing that on Investing with Adam K. If I have a little bit more time, I'll actually do another follow-up video that'll be similar but different so that I can post on both pages, because I really do appreciate if you're watching and you were the guy who made that comment about that I can't put the same thing on both pages. I really appreciate it. I know you were sensitive to like not wanting to get me upset, like you were saying something negative. No, not at all. I really appreciate the information. I just figured I could just post the same thing on both pages and go from there. Anyway, have a great Thursday. If I don't talk to you guys tomorrow, have a great weekend. I'm not sure I'll have time to do a video. I think this is Super Bowl weekend and we got snowboarding and all sorts of stuff going on. Have a great day. Bye-bye.